I'm Caitlin Moore, the Financial Literacy Manager. I am recording, so this can go online for those who couldn't come today. But we are going to be talking about payday loans. This whole series, the Red Flag series, is just based off of financial red flags that you should have and to pass on to folks. So today we're going to be talking about the payday loans. Feel free to ask questions. I really don't mind at all. So let's talk first about what is a payday loan. Payday lenders they're offering short-term loans with the promise of payment. So they're going to give a really short-term loan, and there's a limit. There's a federal limit, and then there's a state limit to how much they can actually loan out. And it's usually a pretty small amount, 500 to 1,000. Very rare that you're going to find something more. The borrower themselves has to write a personal check. So they have to have a checking account of some sort. So whether they're using a debit card or a personal check, they have to give the money, the collateral up front in order to receive the cash. And then the average loan term is about 2 weeks. So they usually go by pay period. You have to have a job or some sort of income in order to be approved for this payday loan. So not everyone can do it, or there has to be some sort of collateral behind it. So sometimes people even put up their cars, something like that, for the collateral. But a fun fact, there's 23,000 payday lenders in the US, which is twice as many as McDonald's, which is crazy because we're going to learn a little bit more about who they're targeting and their targeted audience. And so to have 23,000 lenders being very specific about the neighborhood that they're in, it's pretty incredible how strategic they are. But first, how do they work? So if cash is needed immediately, a lender can loan up to a certain amount. Like I said before, a credit check is not required. This is why a lot of people use payday lenders, because maybe they don't have credit or they have bad credit. So they're more afraid to go to a bank to get a loan. But they must have a bank account in order for the lender to receive the money back. Interest is charged in various terms. So they could do weekly, 2 weeks, or monthly. The 2 weeks is the pretty common option. And we're going to do some math in a little bit about how this works, because it's the fees and the interest that get you. So interest charges vary, but on average, you can expect about $15 to $20 for every $100 that you borrow. So if you're borrowing $500, you can pretty much bank on $100 in interest. So somebody's going to have to pay back $600. And the likelihood of a lot of folks doing that in a 2-week period is very small. And that's why payday lenders exist, because they're making a lot of money. Lenders will confirm right away that you have the bank account or the collateral, and then you have to sign the check, and they're going to hold it for that period of time. You will need to return to the lender within the agreed upon amount of time to pay back the loan. So you can do it in cash. A lot of lenders will let you pay back in cash if you need to, but they're going to hold on to that check just in case. But one of the things that I don't think many people think about is that if they're giving their bank account number to these lenders, they now have your bank account number, which is going to come to bite them later, especially if they don't pay back the loans. And we will get to that one. So this is the fun part, the costs. So you walk into a payday lender and you need money fast, and you're going to pay back in 2 weeks, but it's going to cost you more. We all kind of know that concept of how they work, but the amount is ridiculous. So the maximum loan amount in Nebraska is $500. So not a ton of money, but statistics show that it's about 60 to 70% of U.S. citizens cannot afford a $400 emergency today. So for a lot of our country, $500 is actually a lot of money because they couldn't cover that otherwise. And covering it means having a credit card, having cash in the bank, or even having someone to borrow it from. So for 60 to 70% of folks, they couldn't even find $400 from a friend or a family member. So payday loans are very handy. The maximum loan term in Nebraska is 34 days. So that is as far as the lenders will go out as far as repayment. And then the finance charge, they usually go by 2-week periods, is about on average, I looked up some statistics. Some are lower, some are higher, but I don't think people are shopping around for this information. But it's $17.65 per $100 borrowed. So if we look at this from an APR, so an annual percentage rate, if you stretch that out, it's 459% that they're allowed to charge. And federally, it's over 400. I think it's capped at like 460, 470. There is some legislation coming down from the federal side to limit the amount that a payday lender can charge their APR, which would come down to about 30% from the last I heard. So 459% to 30% on an APR level. So we're not even talking just the 2 weeks, but the APR. So let's take a look at how these are calculated. So we're going to borrow $500. The finance charge is about 20% on average, even though Nebraska is a little lower, but our average is 20%, so $20 per $100. They're going to divide that by the 365 days. This is how we're going to get our final calculation of how much interest rate we're being charged. So 20% divided by our 365 is 73. 73 divided by the 14-day term comes up with 5.2. And we're going to times that by 100 because we're borrowing $100. And so your annual percentage rate on this $500 is 521%. It's very confusing. And a lot of times if you're able to pay it back in the 2 weeks, obviously you're not paying back 521%. But if we look at the long-term percentage, it's astronomical. And the reason why this is super important to know is because most people do not pay back their original loan in that 14-day period, or even the 34-day period that Nebraska requires. So we are talking about money on money on money. So compound interest, they throw back that into the loan, and then there's interest charged on that. And it just goes on and on every 2 weeks or 34 days, whatever your loan period is. So the concept of compound interest is a totally separate lesson, but it's really they charge the interest and then add that to your total. So 500 becomes 600 because we're getting 20%. And then it becomes that much more and that much more. So every 2 weeks, we're seeing our interest become our balance, and then we're being charged interest on that. So that's where we're getting this huge, huge number, and that's where people get stuck. So in Nebraska, payday lenders are really allowed to only charge up to 459% annually, but they go after you legally, and we're going to talk about that. So if we originally borrowed $500, by the end of the year, you could owe over $2,700 according to this interest rate, which is sad, because if somebody just blew out a couple tires and they need that $500 really quick, but they can't pay it back, they're going to end up paying back a small car at the end of it. So they could have almost bought another car instead of just paying for the tires. So it's really sad. And this is the piece of the puzzle that people don't realize. They think, oh, it's only for 2 weeks. They don't think, I can't pay this back. I couldn't pay for it now. I certainly can't pay it back later. And so they end up owing all this money. It's just really sad how these lenders can do this. So some of their strategies, and Amy, this would be really good for you to pass along. Some of their strategy is really just to put themselves in target neighborhoods. And I'm going to show you a map in a couple slides of what it looks like for Lincoln. But they're targeting low income, unemployed, minorities, folks that are unable to qualify for traditional loans, so low or bad credit, which often comes with unemployment or low income. Credit's not the first thing that people are thinking about, and so it's just an afterthought. So they tend to have bad or low credit or no savings. So that definitely goes with the low income and unemployed neighborhoods. So if we think about Lincoln, I'm actually going to skip ahead. No, I'm not. If we think about Lincoln, here it is. This is what it looks like. So there's over 15 payday lenders in Lincoln. And if we look at the map and find Highway 2, there's only one that's south of Highway 2. So out of the, I think there's 15, 16, maybe 17, one is in South Lincoln. because you're not getting the low income families, the minorities, unemployment, things like that. It's the more affluent neighborhoods will have less of the payday. But if you look at O Street or Highway 34, look at all of them. There's actually one where it says Advanced America. There's actually 3 dots behind that. So they're all right there on O Street, right downtown between about 10th and I believe it was 40th. That's where they all are. And that's pretty incredible, but they're definitely targeting these neighborhoods, so low income, unemployed, minorities. So for the folks that are working with the clientele that live in those neighborhoods north of O Street, they're the ones that are being bombarded with the bright signs and people trying to get them in the door. I can think of the one that's right there on 27th and O, right there on the corner on the northwest corner right there. It's in a little shopping mall. So if people are there, they're going to see those payday lenders right there. And I think there's a couple if you go up 27th too, that are right along the street there. So pretty strategic. They're not looking in the affluent neighborhoods at all. It's a waste of time for them. So they're going to go where the cash is not. Most payday lenders are very aggressive when it comes to getting their money back. So we've given them a check, we've given them access to our bank account. It doesn't always mean that they're going to cash that check after 2 weeks because they want that interest. They want to charge you more. But they are going to contact you regularly. So if you've ever gotten put into collections and gotten those collection calls, there are federal guidelines on how often a collections agency can actually call you per day. But I couldn't find anything on payday lenders. That might be the case, but it might not. But they will call, they'll take legal action if they're not paid in time. But I do believe they're going to be strategic in not being paid on time because they would rather get the extra money from you, especially if you're going to go to court. They're going to make you pay for the court fees. So that's another thing to consider. So what do you do if you have a payday? I just want to stop here. If there's any questions, please do ask. Or if you know somebody, I love hearing stories, so we could share that at the end. But what do you do if you have a payday loan? Couple of things. One of the biggest things is to get it paid back ASAP. So if you have other bills, I hate to say this as a financial coach, I don't want to say this, but if there's anything you could put off in order to get this payday loan paid back, it's really important that you do. Because the interest that you're going to be charged over 2 weeks, a month, a year is quite different than other bills that you might have. So paying it back is the first priority. There might be some agencies out there that could help with your other bills in the process of paying back the payday lenders. Most nonprofit resource organizations will not pay back the payday loan, but they'll help you pay other bills. So if we could get other bills paid and then transfer those funds to the payday loan, very necessary to do so. Ask to set up a payment plan with the lender. Sometimes, depending on how deep you are into your loan, they'll actually set up a payment plan. So you pay a little bit at a time. Some might stop the interest charges or forgive some of it just to get their money back. I've read a lot of stories where that wasn't the case, but if you get someone pretty determined to get any of the loan back, that they might put you on a payment plan. So that might be something to consider. And then just tangible things. If you have any sort of debt, take on more hours at work, sell unneeded personal property online. I know Facebook Marketplace is a great place to sell things. Personal loans at the bank are rare. So not just UBT, but any bank, it's very hard to get a personal loan because you have to have collateral behind it. There are specific loans that even UBT offers that are low interest, but also you can't take out a whole lot. So they lend very small amounts. But you often have to have good credit. So if you can manage to find a bank that will give you a personal loan with a lower interest rate, take it. Take that and then pay off your payday loan. Again, as a financial coach, I don't like saying those things, but often when people are walking into a payday lender, they're absolutely desperate. And then when they're trying to pay back the payday lender, they're even more desperate. And so sometimes you have to do a couple strategic moves in order to get yourself out of that loan. Work with a financial coach to readjust your budget. Like I said, as a financial coach, I want to work with people so that they can budget. And then if they are paying back debt or these payday lenders, we can look at your budget and say, well, let's get food at the food pantry and clothes, elsewhere at a resource that's giving it away for free, so that we can transfer those funds into the payday loan. So I can be really strategic with the budget to make sure that we're not having to spend all of our money on things that we normally do, because there's resources out there that will give it to us for free. My theory is, and it's been proven a lot, in the city of Lincoln, you do not have to pay for food or buy clothes. There's a resource out there that will give it to you. And so if we're budgeting for food and clothes, we can transfer that. So working with financial coach such as myself, and it's always free. I offer this for free through UBT. We never charge you, and you don't have to bank with us to utilize the coaching aspect. If you do need to bank with us, I'll walk you through all that and get you an account and even give you a tour of the bank, whatever you need. But I don't have any strings attached to my financial coaching. So feel free to send people my way. And then another thing is to call a debt consolidation company to help. If you do have other debt and you're unable to even pay back your payday loan or the other debt, maybe consolidating would be a good idea. I'm not a fan of debt consolidation. There's always another way to do this before you ruin your credit with the consolidation company. So it's kind of the last resort, but it is an option if you need it. So how to avoid payday loans. Very similar to what you do if you have a payday loan. If you could avoid it altogether, that is the best option. There's going to be a video that goes online through social media, through UBT, about just a quick update about payday loans that I did. And one of the things I say in there is, if you need to go to a payday lender, ask yourself if you really need to be there. There are other options to avoid walking in there and having to pay 459% interest. And one of those is just to create a budget. If you're not good at budgeting, I have a lot of resources, and as a financial coach, I'm happy to walk you through that. Again, you don't have to bank with UBT to utilize me as a coach, but creating a budget, there's plenty of apps out there. Every Dollar is my favorite. If you do bank with UBT, we have UBT Compass. It's a budgeting app. So there's a lot of resources out there that are free to create a strong budget. Seek community resources to help with your budget planning. And that really means utilize resources in the community instead of having to pay for them yourself. So if you're on a very tight budget, utilize the resources out there. My LNK app is very important. I think every social worker should have that on their phone, and then encourage their clients to have it on their phone. It's a real-time app that they're updating constantly about assistance in Lincoln. So if you need new tires, or you need food, or you need a job, there's so many connections on the My LNK app. It's awesome. Sometimes if I get a call from someone and they need some assistance, that's the first place I go, actually, is My LNK, because it's real time and it'll show you what's open and times and things like that. So another option is to seek a higher paying job. I think people are very fearful about asking for a raise, even if they're in a minimum wage job, but do it. It shows initiative. It shows that you really want to be there and that your job is important. Or seek another job or another higher paying job. Start saving, be proactive. This is very hard for first-time budgeters to think ahead about what I'm going to need in the future. But like I said, most Americans can't cover a $400 emergency. And so if that's your first savings, is $400 to cover, let's say, tires or your deductible, maybe it's a $500 deductible and your insurance, save that much, put it in cash, put it under your mattress, open up another savings account where you don't account for that money, but it's there if you need it. So I'm a big fan of, if you have to start somewhere, start with that initial $400 or $500. Ultimately, I would suggest $1,000, but smaller amounts. That's the issue with us Americans, is we can't cover the $400. So if we could save that, that would be a great step. And then start building your credit. Again, another lesson for another day. But if credit is the issue because you can't get a loan without credit, like from a bank, and payday loans are your only option, building your credit is going to be really important. And I've got a ton of suggestions to do so. So even if you just need a list of how to build my credit suggestions, contact me and I'll get that to you, because it's really not that hard to start building your credit. So no credit is better than bad credit. For a lot of lenders, especially for young people, it's a given. They're probably not going to have any credit at all, but to make sure that it stays positive or it's growing is better than having bad credit. There are a couple of resources here, and this YouTube story, if you're interested, I can send this to you via email, but there is a story about a gentleman who took out a payday loan of a very small amount. I think it was like $1,000, and he ended up owing close to $10,000 when it was all said and done. They took his truck. I think they had to do something to their house, like mortgage their house or something. But the payday lenders were relentless when it came to getting the money from this man. But they also talked about when it was all said and done, what they did and how this family and this gentleman worked to avoid that in the future and how hard they worked to get things paid off. So it's kind of this inspirational story, but it's also a really good reality check in the way that payday loans work. You can YouTube payday lender stories, payday loan stories, and get some really great ones. But just being very cautious about and being very knowledgeable. Amy, I know you work with younger folks. Just if they've never walked into a payday lender, even just showing them some videos is a really great idea, just so that they're aware, because especially for folks that come from poverty, live in impoverished neighborhoods, really don't have access to banks or loans, payday lenders is what they think about. That's the go-to. And maybe they've been told over the years that it's an okay thing, but it's not. It's not a good way to start your financial story. And so if we can help people avoid them, that's what we want to do. So I'm done with my presentation at this point, but I'd love to take questions if you have them, or feel free to email me or contact me if you do have other questions that you don't want to talk about on the video, or if you know somebody that's kind of caught in trouble and needs some financial coaching. I am more than happy to work with them. I love doing that. So I would, just give me a call if you need anything. So Amy, do you have any questions?
I do not. Thank you for the information,
Yeah.
Caitlin. I'm
Yeah.
excited to put it to work.
Cool. Awesome. Well, thank you so much for coming. I hope to see you on some other ones.
Yeah, I will be there. Thank
All
you.
right. Thanks, everyone.